Good morning everyone and welcome to Moneycontrol live stream. You're watching the opening bell and I'm Santosh Nair. Well, in the spotlight section today we have the US labor market. Now, it's a strange case where good news from the economy is turning out to be bad news for the stock market. We saw the US market sell off sharply, and that's because the labor markets in the US still show no signs of cooling off. Now, jobless claims for the week ended December 17th came in at 216,000, which was slightly lower than what the market was expecting, but at the same time it was still higher than the number of 214,000 for the week before. Now, why is that a bad news? As long as the labor market remains tight, it means that employers will have to pay higher salaries, and higher the salaries, which means that inflation may not come down in a hurry. Now, we have already seen some cooling off in inflation over the past month, not just in the US but across the globe. But if the labor market remains tight, then that is going to make the Fed's task of lowering inflation that much more tougher. The market expectations generally is that the US Federal Reserve will now start easing on rate hikes because inflation is under control, but the labor market seems to suggest that probably inflation can remain higher for quite some more time. So, that is the big challenge before the Fed at this point in time. The market is still pretty hopeful that maybe the Fed will actually start cutting rates at some point in 2023, but if the labor market remains strong and there is a direct correlation between high wages and the inflation, then it seems unlikely that the Fed will cut rates anytime soon. And now that is the realization that seems to be dawning on the markets as well. We have seen some selling pressure in US equities over the last couple of trading sessions. So, 2 straight sessions of losses now. Well, and moving on to the market, to the trade setup, the SGX Nifty futures is indicating a bearish start for the Indian market. The Nifty is down by about close to 100 points, SGX Nifty down by 100 points. So, we could see a weak opening for India as well. And local traders have been unwinding their positions. If you notice, the institutional inflows, both FII as well as domestic, both were positive, close to about 2,000 crore worth of shares net bought yesterday. But at the same time, you have local traders unwinding positions, which is why you saw the weakness in the across the board yesterday, Nifty and Sensex ending lower. But the bigger pain point appears to be in mid caps and small caps, where you are seeing a lot of selling pressure there. There is also the fundamental side of the story to that, besides the some bit of margin pressures that could be setting in because of the steady decline in prices. If you look at the second quarter numbers there, broadly there were no major earnings surprises, which means that valuations are almost full at this point in time, and given that there is very little valuation support, it looks like investors are in no hurry to bottom fish at these levels. And let us move on to the FNOQs. Yesterday we are seeing long build up in futures of Mahindra and Mahindra Financials, Alcom and Punjab National Bank. We are seeing short covering in futures of Jubilant Foodworks, Lupin and Emphasis. These stocks rallied a bit yesterday, and we are seeing short build up in futures of Torrent Power, Metropolis Healthcare and Gujarat Gas. Now, diagnostic stocks had a good run the day before on reports of COVID cases surging globally, but once again the overall view in the market is that diagnostic stocks are still looking expensive, considering that you have competitive intensity, which is newer players entering the field, and also that a steady stream of earnings, which is COVID testing, that may not come back in a big way like the way we saw in 2021. Let us look at some of the newsmakers on our list this morning. Railtel Corp, that company has won orders worth 99 crore from Webel Technology. Ingeroll Rand has told the stock exchanges that it plans to set up a new plant in Gujarat, and the cost for setting up this plant is close to about 170 crore. Rail Vikas Nigam, the company has said that it has got a 199 crore order from GMRC for construction of a depot at Basin. Now, overall rail stocks had a good run last month, but now some bit of reality check setting in there as well. We have been seeing a bit of profit taking there after the sharp run up in prices over the last couple of months. And let's move, well, one more newsmaker of the day, Lupin. Now, this stock has been an underperformer in the pharma sector. Now, the company said that it has recalled 4 lots of Cunapril tablets due to potential presence of nitrosamine impurity. And with that, let's move on to the hot brokerage pick this morning. Motilal Oswal has put a neutral rating on United Spirits. Now, Motilal Oswal's target price for the stock is 880 rupees. According to Motilal Oswal, the company is grappling with higher raw material prices, and this could probably dent the earnings in the short term. Again, United Spirits too has seen a good run up in prices so far in 2022. According to Motilal Oswal, the recently concluded sale of popular brands, it could have been done more out of compulsion, because the company did not have any other choice. And at the same time, Motilal Oswal feels that the outlook for FY24 is positive, but at the same time valuations are the current price is factoring in most of the positives. So, valuations leave very limited room for upside, and that is the reason the brokerage has decided to rate the stock neutral. And moving over to the stocks on our watch list this morning, starting off with Bata. This stock was a major play on the reopening trend. So, the stock almost doubled from the pandemic lows, went on to hit a high of a little over 2,100 rupees, but over the last 6 months almost, the stock has been a major underperformer. Now, the underperformers almost started with the promoters trimming their stake in the company through a block deal sometime in June. Since then, the stock has been steadily drifting lower. Now, the June quarter numbers were pretty strong. The company reported a net profit of the company reported revenues of close to about 249 rupees and also margins of close to 26%, but that same performance could not be sustained in the September quarter, where we saw a decline both in margins, a sharp decline there. In fact, the margins fell to about 19%, and revenue growth has also been weakening. Now, according to Centrum, which recently met up with the management of the company, the volume trend for the current quarter is pretty much strong. In fact, the company is all set to exceed sales of the pre-pandemic levels, but at the same time, Centrum has cautioned that despite the overall demand now picking up, Bata's growth is still lagging its peers, and that could be one of the reasons the stock has not been really performing over the last 6 months now. The next stock on our watch list is V-Guard Industries. The stock is quoting close to a 52-week high. It's been had a good run at the bourses recently. Now, the company last week announced acquisition of Sunflame Enterprises, kitchen appliances firm, for about 660 crore. V-Guard will be funding this acquisition through a mixture of both debt as well as internal accruals. Now, the company is a major player when it comes to electrical segment as well as electronics and consumer durable. Its a main market is the south, but the acquisition of Sunflame will now help it get a foothold in the fast growing kitchen appliances segment also. This space has seen a lot of acquisitions recently. We saw Whirlpool buying out Elica, Philips buying out Preeti, Crompton Reeve buying out Gandhimati Butterfly. So quite some bit of actions happening in this space at the moment. Now, according to Elara Capital, which tracks V-Guard, I beg your pardon there, according to brokerage tracking V-Guard, the company is looking to increase its exposure in the non-south market as well. It's a major player in the southern market, but it's also looking to increase its presence in the non-south market, where it gets about 40% of its sales at present. And according to Moneycontrol Pro, the stock is looking a little expensive at about 34 times forward earnings, but at the same time, some person who is looking to accumulate the stock over the long term, this seems to be a good stock to accumulate at the time being. Well, with that, the market has opened. The Nifty has opened below the crucial 18,000 mark. It's down about 113 points, 120 points now in early trades. Market breadth is also pretty weak, tracking the bearish trend in global markets. less than 300 stocks up on the NSE at this point, and we have almost 1840 stocks which are down. So today looks like a severe day of severe sell-off. Nifty mid cap is also down. It's already down 1% in early trade. Nifty bank is down by about 0.6%. The key thing to watch out for will be whether the company is whether Nifty manages to hold above 18,000. That's been a psychological support level for the index. Already we have seen some of the major support levels being taken off. 18,400 was the first support level. The Nifty fell below that, then 18,200 was taken out, and now today remains to be seen if the Nifty can stay above 18,000. Now technical analysts view support levels very closely, because if a support level is breached, then it automatically triggers more selling, and that is what we'll have to keep an eye out for today. Well, the last stock on our watch list is Chambal Fertilizers. Now, according to Elara, the government has disbursed a sizable chunk of its subsidiaries during October-November. This should help the company manage its working capital requirements better. Besides that, raw material prices have also been declining, so that is another booster for the company. However, Chambal Fertilizers again has been an underperformer for the last few months now. According to Elara, the growth is likely to be driven by the crop protection business, where the management is expecting the strong growth momentum to persist. According to SimplyWallStreet.com, there are a few points of concern also about Chambal Fertilizers, notably that the debt on the books of the company has risen very sharply over the last 1 year. It's risen from close to about 3,600 crore to close to about 6,900 crores. Now, the good part about Chambal Fertilizers at this point is that the interest coverage ratio is pretty healthy at 9.8%. Still, the high debt would be something to keep an eye out for. Well, and with that, it's a wrap on this edition of Opening Bell. Thank you for watching, and we'll be back with you at 3 p.m. today.